How much passive income did I generate this month? Passive income is the money you receive for doing absolutely nothing. For the last 13 years, I've been drip feeding spare money each month, mainly into large cap UK companies who pay reliable dividends. I reinvest the dividends and allow them to compound over time. By using a stocks and shares ISA, the dividends I receive are tax-free. Before we start, I'm going to go back in time to 2009, the year it all started. In January of that year, I received no dividends at all, and even the following 2 Januaries produced nothing. Many of the companies at the time cut or cancelled their dividends after the financial crash. Then in January 2012, National Grid paid me £60, and in the following year I received payments from National Grid and GSK. Now let's return to January 2023 to see where we are today. This is not financial advice, and I'm simply showing you my own journey. At the start of each month is a premium bond draw. The prize rate has recently been increased again to 3.15%. There is one draw a month and you have easy access to your money. There is a chance to win $1 million each month and all winnings are tax-free. This was yet another month when I didn't win a thing. In fact, it's the 3rd month in a row where I've drawn a blank. You can see on this screen the value of each prize and how many of them there are. Quite simply, the more money you have invested, the greater chance of winning something. If it were possible to own just one premium bond, and with average luck, it would take you around 2,000 years to win a single prize. So in order to be a winner by today, you probably would have needed to buy your bond around the time that England was invaded by Romans. And to win the £1 million jackpot with a single premium bond, you probably would have needed to have bought your bond before the Earth had even formed, almost 5 billion years ago. I use premium bonds as my emergency fund, so I hopefully never have to sell my shares and can allow them to compound over time. On the 6th of January, I received a present from Tate and Lyle. The shares are up 5% this year so far, and they pay a relatively small dividend of 2.4%. Last year, the company sold off part of its business and returned some capital to shareholders, so it's now a smaller company, hence the drop in dividends, as you can see from this graph. I think it's a well-run company and should do well in the long term. This month, Tate and Lyle paid out a total of £55. If you want to see how much I hold in each company, then be sure to check out the video description. On the 13th, National Grid rewarded its shareholders with cash. The shares are up 3% so far this year, and the dividend is a very respectable 5%. As you can see here, the dividends have been increasing steadily year on year. It's a good sign if a company consistently raises its dividend. This month, National Grid paid out dividends of £245. On the 16th of January, it was the turn of GSK to pay their shareholders some passive income. The shares are down a touch so far this year, but the dividend is a healthy 4%. GSK underwent a significant change last year when it spun off a separate company called Haleon. Just like Tate and Lyle, GSK is now a smaller company, and here are the historical dividend payments. I believe that GSK is now a more streamlined business and should do well in the long term. This month, GSK paid out £135. The green bar on this graph shows my passive income from January 2021, and the blue bar is from last January. This time it's lower, which is very unusual, but this is due to GSK and Tate and Lyle reducing their dividends. This graph shows my average monthly dividends since my journey began. You can see the effect of the pandemic in 2020 and also how quickly it can recover from a crisis if you don't panic and simply carry on investing. At the time of this video, my average monthly dividends are now at £1,168 a month. Now, if you hang on to the end of this video, I'll reveal everything I've been buying and selling in January. Surely that's worth a quick tap of that like button. Thanks. First, a quick look at the FTSE 100 ex-dividend dates for the month ahead. If you own the shares before this date, then you are entitled to the dividend which will be paid to you on the payment date. As an example, I own shares in Imperial Brands, which goes ex-dividend on the 16th of February, and I'll receive just under 50p for every share held, and this will be paid to me on the 31st of March. Now for the payment dates. In February, I'll be expecting payments from United Utilities and British American Tobacco. Here are the highest yields, with Persimmon leading the way at over 15%. With higher yields, there is usually a greater risk of a dividend cut. My own portfolio has a current yield of around 3.8%, which is slightly above the FTSE average of 3.5%. So what have I been buying this month? Firstly, I've been adding more to Rolls Royce. For those of you who follow the channel, I started buying shares in this company last year when the share price had plunged. It later fell to a low of 64 pence in October, and at the time of this video it's up to 107 pence, a rise of 67% from its low. Rolls Royce is the second largest maker of aircraft engines, and those engines have to be regularly serviced. Its fortunes are closely linked to the aviation industry, which I believe will eventually get back on its feet. There are still worries, however, and debt is very high. The company must also face the challenges of a lower carbon future. Rolls-Royce does not currently pay a dividend, but personally I think this company is a long-term buy and I'm prepared to wait. Another company I've been buying is the multinational alcoholic drinks giant Diageo, which has over 200 well-known brands to its name. These brands are very strong even during economic downturns, as they are generally seen as affordable luxuries. And did you know that Guinness has now become the best-selling beer in British pubs for the very first time? Dividend growth is one of the best I've seen. The yield might only be 2.2%, but if you've had money invested several years ago, then the yield you are getting today on that original amount will be a lot higher than 2.2%. As well as individual shares, I've invested more in an S&P 500 ETF. This one has the ticker code IUSA and gives me exposure to the largest listed companies in the US. Another favourite of mine is VHYL, and I've been buying more. This gives me exposure to large and mid-cap companies from around the world which pay higher dividends. The yield is 3.7%. If you have plans to start your own investing journey, then you may want to open a stocks and shares ISA, but which one should you choose? Click here to see which one is best for you.